Well, good morning from Perth. Welcome everyone. Good afternoon to those who are joining us on the other side of the country. And thank you very much for your time and for joining us for this investor webinar featuring Chalice Mining, ASX code CHN. My name's Nicholas Reid from Reid Corporate, and we're very fortunate to have Chalice's Managing Director and CEO, Alex Dorsch, joining us today from Chalice's Perth head office. Joining Alex in the Chalice boardroom, I'd also like to welcome Chris McKinnon, the company's Business Development and Legal Manager. The purpose of today's webinar is to provide an opportunity for Alex to discuss the metallurgical test work and scoping update from the Julimar Nickel-Copper-PGE Project in WA, which has highlighted the potential to materially enhance overall metallurgical recoveries. Alex will briefly run through yesterday's announcement, which you can see on the screen in front of you, while also discussing the upcoming resource update and the rationale for continuing the scoping study, before opening the floor to the important part, your questions. If you'd like to register a question, please use the Q&A tab on your webinar browser and remember to log them as soon as possible so that I can put as many of them to Alex as possible once he concludes. Alex, thanks very much for your time today, and we greatly appreciate it. Please go ahead and walk us through the latest developments at Julimar.
Thanks, Nick, and thanks everyone for joining on short notice, and obviously great to present to shareholders and investors around the industry the results that we've reported yesterday. So look, for context, I think most people have been following Chalice closely, and obviously the Julimar discovery, which we made in early 2020, so roughly 2.5 years ago now. It's worth reminding everyone that I guess this is a discovery that's still in the process of being discovered. So this project is a very new project. It's very unique and also very, very large. So we've found a very large deposit of nickel, copper, cobalt, PGEs, something that really doesn't come around very often, and certainly is very unique, particularly in the Australian context. So we've done a lot of work over the last 2.5 years. Obviously, drilling, defining resources. That process is obviously still ongoing. And obviously we've done a lot of metallurgical work and other technical studies on the project as well. And what we've found through that work, we've found that the resource continues to grow, and our understanding of the project also continues to grow. So trying to obviously study an asset like this, which is a tier 1 asset. It is not the type of project, not the type of mega project that you rush. And certainly our approach in doing the studies and developing this asset is one of diligence and an appropriate level of analysis. So we do have a mega project on our hands, and you certainly don't rush a mega project. So yesterday, as most will be aware, we announced some very promising metallurgical test work, as Nick talked about. That really is the product of the last couple of months' worth of test work we've done, looking at particularly enhanced PGE flow sheet options, and we feel like I guess in some ways the resource, the new information is obviously material. And it warrants a continuation of the study. I guess we do have somewhat of a moving target in terms of trying to take a snapshot in time for this study. And what we've seen with the metallurgical work is that it's showing some significant upside, as I said. So stepping through some of the highlights from that work. Obviously the test work really, particularly from the middle of the year onwards, really adapted to what we were seeing in the drilling, which was a lot more PGE dominant mineralisation, particularly at the northern end of the Gonville deposit. So we really started to investigate a couple of avenues to enhance recoveries of PGEs there. The first one was looking at some leach test work on the flotation tails. That's really demonstrated almost a theoretical limit to how much metal we can recover. and that theoretical limit, if you like, is shown, that is significantly higher than just flotation alone. So we consider that a very promising and very material result, and obviously we're keen now to understand that ability to leach the flotation tails in detail, which I guess somewhat hybridizes a base metals flow sheet and a precious metals flow sheet. That's not particularly unusual. The same sort of concept is employed in large porphyry copper gold assets or copper precious metal assets. They typically end up with a hybrid between a sulfide flotation or base metals plant and a precious metals plant. And secondly, we've also seen that by grinding finer than what the majority of the test work has been done at to date, grinding finer seems to deliver us more and more recovery, and that's no surprise to us because we do see that the platinum, palladium, and gold is quite fine. It's quite fine-grained material, and obviously, the finer we grind, the more we liberate. So that is also something we see material upside in, given that all the test work, like I said, was at grind sizes of 38 microns and above. Again, it's not unusual for base metal assets and precious metal operations to grind finer than 25 micron. It's something that's employed routinely around Australia and in other areas, and particularly in places like South Africa, doing staged grinding. So, approaching, milling, floating, and then milling and floating again in a staged manner. That's something we also see a great deal of promise in investigating. The other, I guess, moving target for us is the resource. For those who've been following the last couple of months, we've reported some very exceptional recent step-out holes. We have about 60 that are outside the resource, and that's basically showing that the resource continues to grow. And what we've seen through the study phases thus far is that basically our mining or conceptual open pits are bottoming out on drill data. So it says to us that there's further growth in the open pit category than what the drilling is, or where the drilling was back in March when we cut off the data for the July resource update. So that's obviously that's not a problem that's likely to go away for us, given that the resource continues to grow as we drill it. But it is something that we think will materially impact the project. So we have a resource update to model and to complete in the first quarter of next year. That's also going to evaluate some detailed infill drilling that we've completed. So we have done a localized program of 10 metre spaced infill drilling around the starter sort of pit area at Gonville, or the anticipated starter pit area around the G1, G2 zone area at the southern end of Gonville. That's basically highlighted as well that our selective mining approaches, so selective here meaning targeting higher grade parts of the resource in a smaller throughput case, that really requires that infill drilling to really get some certainty around grade and the size of the blocks or the SMUs. So that infill drilling, we anticipated that may be the case many months ago. So we launched that infill drilling around about the middle of this year. That's been completed, and we're waiting on assays which will come in early next year, and then we'll update the resource. So we're anticipating there, I guess, a multi-pronged update there for the resource, not only in the size, incorporating new drill data, but also the confidence in terms of the way we're modelling the high-grade part of the resource. Obviously, there is a high degree of optionality here in this resource. There's quite a lot of high grade in the core of the Gonville resource, and then there's even more, I guess, halo or low grade mineralisation surrounding that core of high grade. So there's also no definitive, boundaries between the high grade and low grade. There is more of a continuation or a continuum of grade. So that's obviously makes that very important and critical to understand how selective we can be. And we've, I guess, already commenced that de-risking process with that completed infill drilling, and that will give us a very robust resource early next year to complete modelling on. So those, I guess, as it says there, those two factors combined have meant that we've made the difficult but necessary decision that just given the growing nature of the resource, the uniqueness of this resource, the optionality, we've said, really we need to evaluate all the options in the scoping study. We don't want to launch into more detailed engineering before we really understand at a high level, obviously at a scoping study level, really what the optimal size and method and flow sheet here is for the project. So we've opted to continue the study, and we will determine really, I guess, a revised timeline for completion once that resource has been modelled and released in the first quarter of next year. So and clearly we've done a lot of work. We've had a number of external independent reviewers, at least 3 different reviewers from all sides of the globe have looked at our metallurgical test work. They've also looked at the key scopes of the study and the work that's been done to date. They have not really seen any material issues or things that cause any rework to happen. But they have obviously identified opportunities for improvement. Some of the same opportunities that we identified in the test work, the external reviewers have picked up as well. So it's only natural that given the uniqueness of the mineralogy and what we found and the scale of what we found, that there's always some experimentation in terms of flow sheet design and process design at this stage. And we're taking, quite rightly, a cautious approach to make sure we do a more comprehensive analysis in those areas, particularly because obviously there's a lot of value at stake there in the project. So maybe jumping ahead to just talk to the flow sheet in a little bit more detail before I hand over to some questions. We have got a robust flow sheet here that we can see a pathway to create saleable intermediate products. So we've got a base metals flow sheet at the left-hand side here, which is basically a copper flotation stage where we produce majority of the copper and precious metals are basically recovered, by flotation only. So we have a very low risk primary product that we can sell to a range of copper smelters, and we've obviously engaged a number of international copper smelters who have expressed a strong interest in offtake of that product, and they've put us very, very attractive indicative terms for all of the metals within that copper precious metals concentrate. So that left-hand side of the flow sheet provides us a really good grounding and a nice de-risked, low risk approach to the primary product. And on the right-hand side, we've started to look at, as you can see there, potentially regrinding and doing some staged grinding between the copper and nickel float stages. And then at the back end of the flotation step, looking at potentially leaching to recover the remaining precious metals from the flotation stages. When we look at our nickel iron concentrate that we produce, we have looked at options to sell nickel concentrate directly to smelters. Obviously, there's a much smaller pool of nickel smelters around, and obviously the nickel market is in somewhat a state of flux. So the market at the moment for nickel concentrate, particularly Western nickel sulfide concentrate, is very, very dynamic. We've got obviously a very large project here, and we're playing the long game. And so we're looking at already midstream options in that space, highlighted there in the blue box. We're looking at basically the nature of that product. It does have some precious metals within the nickel iron concentrate, and we see an obvious potential there to do some hydrometallurgy to separate the precious metals away from the nickel and cobalt. And then that has a twofold benefit. So if we're producing an MHP nickel cobalt product, not only do we get much more attractive offtake terms, we anticipate we get much more attractive offtake terms for the nickel and cobalt relative to a nickel smelter. And secondly, we're going to have a much lower carbon intensity product, and a product that is going to be very attractive to battery PCAM refineries, so precursor cathode active material providers in the lithium ion industry. So that is obviously the growth avenue that lots of nickel producers around Australia are looking at, because of that twofold benefit. And if we can bring in customers, obviously from the battery industry, they can obviously add and bring their expertise to that part of the flow sheet as well. So obviously this is a very much a work in progress. That is the nature of the studies of on a unique large resource that we have. But we really do, we have made a lot of progress in closing out options on the flow sheet here. But clearly we've got some very good recent test work in the grind size and leaching stages to investigate further. And they have the potential to add material. I guess they have a material impact on the economics here of the project. So we haven't taken the decision lightly to continue the study, but I think that it's an important one. Considering the long-term potential here and the nature of this resource, that we get this absolutely right. So maybe on that note, Nick, I will go for some questions.
Thanks very much, Alex, for the run through. As you'd expect, we've got lots of questions that have come through. So thanks everyone for sending those through. Before we jump into them, I might just start, Alex. There was an article that was published on the Share Cafe website this morning talking about addressing speculation regarding the delay in the scoping study. I might just put to you the question that article posed, just to kick us off. The journalist wrote, "Are there unforeseen problems at Chalice's huge nickel, copper, gold, platinum, palladium and cobalt find northeast of Perth that have forced the company to postpone its long-awaited scoping study on mining and processing millions of tonnes a year from the world-class strike?" Could you just kick us off by, I suppose, addressing, I guess, that broad issue that's been raised?
Yeah, look, not at all. I think the concerns are, I understand sort of the nature of the concerns, but really, I guess we're trying to deliver an answer as quickly as possible, and obviously we appreciate there's a strong level of interest in our company, in our project. But like I mentioned, you can't really rush these things. This is obviously carefully analysis, and carefully structured methodical work that we're doing here on this study. So we've had, like I said, the independent experts from all sides of the industry. We've spoken to experts in South Africa, out of Canada as well. So we haven't just relied on local expertise here to review the work that's been done to date. And like I said, they have really provided a strong endorsement of the quality and the nature of the work. So look, we understand the reaction, and obviously it's not a decision. We're not delaying and delaying and taking that decision lightly. But really, we're being, we need to be realistic, I think, about how the nature of this resource, and some of the unique, in terms of, not many companies have found anything like this, for many decades. So I guess it is a bit like uncovering a new mega project and starting from scratch. So look, I think we're very comfortable that and I guess the work is ongoing, and it's none of the work that's been done to date is wasted, if that makes sense. There's no work that there's no sort of going back to the beginning or rework or anything like that. It's just that obviously the inputs in terms of resource and metallurgy are constantly changing.
Excellent, thanks, Alex. Well, look, let's dive into the questions. There's lots of them, so we'll try and work through them as quick as we can. The first one is, the question reads, reading the ASX announcement yesterday, an updated resource is likely to be due in Q1 2023. it would appear that the scoping study won't be released until after that resource update, number 3, which essentially means Q2 next year. Could you please confirm if the scoping study will be done in Q2? And given that there were a couple of false starts, the question is, how confident can shareholders be of Chalice delivering the study on time with no further delays?
I guess there's 2 points to mention. I think, like I said, that none of the work we're doing is wasted work. We continually improve and iterate, really we're taking big leaps forward in our understanding of the asset. The reason why we opted to guide the market to the delivery of the resource in the first quarter is really just that the nature of obviously the scale and the ability to selectively mine the resource are obviously critical parameters that you really do need to have a high level of certainty and understanding of. So we want to obviously look at that resource and really then make a decision around appropriate scale. In particular, that's something that has been, I guess, a challenge, that when you do have resource growing at the rate it is currently growing, it is a challenge to aim at that moving target. Like I said, we've got a lot of drilling that's well outside the resource now, particularly at the northern end of Gonville. So we do see a material update to the resource likely in Q1. And then at that point, we'll be in a much better position to guide on the additional test work that's obviously going on alongside that work as well.
Thanks, Alex. That's a nice segue into the next couple of questions, which are around strategic partners. The first one here from Graham Taylor. Does the good news about the ever-increasing scale of Julimar tell us that Chalice needs a partner now who can assist at this stage rather than the mine development stage? Otherwise, does this mean that we're at least 6 months away from the release of the scoping study?
Look, I think we've known for probably more than 2 years now that this is an exceptional size deposit resource, that could get even bigger again over time. So we've been very pragmatic about looking at areas where we can add value through strategic partnering as well as de-risking. So we are working very proactively on that side. I think particularly given the nature of the pending nickel demand, or the growing nature of nickel demand for use in batteries, is placing a lot of emphasis on the very, very few undeveloped nickel sulfide resources around the world. This is obviously a very, very large one, so it is obvious that it's going to attract a lot of attention. So we are working closely with potential strategic partners. We have been for some time. I guess it's important that before we select and really determine an appropriate partner, that we have our own understanding of the asset at a level which allows a transaction like that to happen. So it is I guess we intend to keep those discussions going through 2023. And obviously when the scoping study is released, that will be a catalyst for further discussions with those parties.
Thanks, Alex. Another one on partners. You've obviously said that the intention is to look at potentially bringing a strategic partner on board next year. The question is, will Chalice be happy literally selling the Gonville family farm for $3 to $4 billion? Or would you be looking to sell smaller strategic parts of the project, therefore allowing Chalice to sort of take the next leg as a very large mining company?
Look, obviously you can't speculate there, but I think what we have is incredibly unique. There is just no material discoveries like this happening around the world, and in parallel to that, you've got a growing, almost insatiable demand for the metals that are in the ground there. So there is a level of pragmatism in the company about what we can and can't do. But I guess what we're looking for in the near term is strategic partners that are aligned with us strategically, but also can bring downstream expertise as well as market expertise, from the battery sector in particular. So that's really sort of the aim for the near term. We really, like I said at the beginning, we're really in the process of discovering this asset still. So we need to be realistic about how long these things do take. But certainly we do have a high level of interest from a range of different parties, as we've mentioned previously.
Just one final one on partners, Alex, if we can. This one's from Al Harvey. He says, how does the delay to the scoping study impact the potential for a cornerstone equity sell down? And can you also remind us of the company's balance sheet position and the cash burn that you're anticipating?
Yeah, so the company's cash position was 115 million Australian dollars at the end of the September quarter. Our level of expenditures, assuming sort of steady state, is around $4 to $4.5 million a month. So that we do feel we're very well funded for the next 18 months. That allows us to negotiate. We're in a very strong position of strength, with various strategic partners. There is discussions happening at that are all very preliminary at the moment. But I guess obviously the completion of the scoping study achieves two things really. The first is an actual grounding on evaluation, obviously which is required for a transaction, and then secondly it allows the other incoming partner or the potential partner to really get their own understanding of where they can add value and where they can bring their expertise to the table. So look, I don't think it materially impacts the time frame there, but I guess we have flagged that we are interested in bringing strategic partners in typically much earlier than they would typically invest because of the nature and the significance of what we've found.
Thanks, Alex. Let's go to some project-specific questions now. Here's one from Des Moriarty. He says, looking at the finer grind, how significantly does that affect production costs?
Yeah, look, so we don't have any costs modelled as yet for the impacts there, but we've got a directional view, I guess, at this stage that we do think it will have a material impact on the project. Obviously the finer grinding, there are operating cost considerations there, but we haven't reached a point along those curves that we've published where we're seeing really a diminishing return from going finer, if that makes sense. The trend is definitely pushing us to grind finer, and like I said, it's not unusual for base metal and precious metal operations around Australia to have a primary grind size of 10 microns or even slightly finer. So I guess that is the work now that's ongoing, is to really sort of put some parameters around that and quantify that.
Thanks, Alex. There's another one from Al Harvey here. I just hope I interpreted it correctly. Is the scoping study range still bookended at 5 to 10 million tonnes per annum? And is a stage ramp up possible given the high grade core, with additional upside to come from further downstream processing, including capex on pressure oxidation?
Look, we can't guide, unfortunately, to the nature of the bookends on scale, really, because I guess the resource is still being defined, and it's not a particularly deep resource here as well, right? It's starting at surface, so that does open up, the potential for quite significant scale operation. In terms of how far we're going downstream on the flow sheet, I think we're being quite pragmatic that a midstream process is probably appropriate here for the time being. That I guess is the benefit of potentially bringing a strategic partner in as well, is that could help investigate further opportunity downstream. But look, I guess we see the potential for that current proposed flow sheet to produce very high value products. And we expect excellent offtake terms for those two products, based on current market conditions. And obviously the market conditions are getting tighter and tighter for all of those metals. So we do anticipate that particularly Western greener sources of those metals will become more and more desirable over time. So that potentially impacts that decision in terms of how far downstream do we go. But I think we have to do these things sequentially and logically. And I think at this stage, we're focusing really on getting to intermediate products as a starting point.
Thanks, Alex. Next question here from David Roberts. Can you please expand on the demand observed from the EV battery industry in the USA or Europe for the nickel cobalt MHP product?
So that product is becoming, or MHP form of nickel is becoming, I guess, the primary seaborne traded product for the nickel industry, and particularly the nickel, nickel for battery players. So that is the area that is growing most rapidly. It's predominantly MHP nickel cobalt is being sourced from laterite operations around Indonesia, the Philippines, New Caledonia, but sulfide producers, have a role to play there in contributing to that growing MHP space. It is a like I said, the nickel market is in a state of absolute flux, so it's very, very hard to foresee exactly how the next few years plays out. So that's why we're keeping our options, very much open. We do have a dialogue going with potential off-takers from the battery industry that are very much recommending to us to progress the MHP pathway, because it is a very durable and high value product. So I guess I think everyone's aware of what the growth trajectories look like for electric vehicles and hybrids in particular. I think both of those segments require huge amounts of nickel, and quite frankly they're pointing to an industry which is going to be orders of magnitude short in terms of the nickel that's suitable for those demand sources. And I think the Inflation Reduction Act in the US has had a material impact on the industry, because really Indonesia and any Chinese controlled nickel output becomes extremely challenging for any Western battery or electric vehicle company. So that I guess places further strategic value on what Julimar has there.
Interesting follow-up question from Al Harvey here, Alex. He says, appreciating that Julimar is a unique project, are there any other projects globally that you could point to as a comparison from a flow sheet and potential CapEx perspective? You've spoken previously about Jinchuan, but does their flow sheet compare to what is proposed in yesterday's announcement?
Yeah, so there's no real direct analog for us. I think from a geological and mineralogical perspective, we've spoken to similarities with Jinchuan, Norilsk, but also some of the Canadian nickel-copper-PGE districts. Look, there are some similarities to the Bushveld complex in South Africa as well, but not directly. I guess we don't have a chromite reef hosted PGE mineralisation. We've got really orthomagmatic nickel-copper-PGE style, so closer in style to the likes of Sudbury, Raglan, Voisey's Bay, Jinchuan, Norilsk. There's only a handful of occurrences of this style of mineralisation on the planet, so it's not exactly a well-trodden path. There's no sort of playbook to take off the shelf here as to how to design a flow sheet. What makes ours especially unique as well is that we've just got this very high palladium content in it. For an orthomagmatic nickel copper PGE system, this is an outlier in terms of palladium grade and content. So that we that's I guess the driver for us to look at a hybrid type of approach between flotation or a base metal sulfide plant and a precious metals plant. So I think that's probably the only guidance we can make thus far. I think it's interesting that the other asset on our doorstep here in Perth is Boddington, the very large 40 million tonne per annum copper gold mine. Just an hour and a half away from Perth here. That has a very similar hybrid flow sheet. They do flotation as well as leaching. So it's an area that really we need to sort of explore, all possibilities. But obviously the size of the prize here is very much warranting that work. It's quite obvious here that this is going to get substantially larger than what we know today. So I guess, it's worth experimenting with the flow sheet and really sort of continuing that work to capture value. And we're not aiming in the scoping study to try and assess every possible option, because that would be unrealistic. We just want to get to an appropriate level of analysis or a level of detail with the scoping study. We are probably, blending some of the work would be, considered probably pre-feasibility study level of analysis, and that we feel is appropriate because obviously it is a unique style of deposit, and that warrants thorough investigation.
Thanks, Alex. Speaking of the deposit getting larger, you've recently published some pretty interesting step-out drilling results. Sean Kenaway asks, can you give us a range of additional exploration tonnage to expect from this step-out drilling, which you've done to add to the MRE to be published next quarter? Now, I'm sure you probably can't, but could you talk to the significance of those results? You've had some pretty impressive sort of 100-metre plus intercepts, I believe.
Yeah, look, we really have seen a bit of a step change in the width and grade of this PGE dominant mineralisation, particularly at the northern end of Gonville. So the initial first pass resource drilling at the northern end of Gonville was limited to RC drilling, so about 250 metres below surface. And I guess sure enough, as we've drilled below those sorts of depths in diamond, we've seen these very wide, consistent, high-grade PGE mineralisation, sometimes with areas of very good copper as well. So not something that's totally different to what we've seen before, but definitely has more of a PGE dominant flavour. So look, I guess we've some of those intersections are 650 metres outside the current resource. The resource is constrained at the northern end of Gonville, to those 250 metre deep holes at the northern end to date. So that's just a function of that's where we were, when we cut off drilling back in March or so this year. So there is I guess an artificial constraint there to the northern the depth of the northern end of the pit shell, and we think obviously the recent drilling is a material or points to a material upside to the current resource as it stands today. And also, we'll have a bearing on the high-grade part of the resource as well. I guess we have seen, the wide sort of continuous, quite exceptional results, only at depths of sort of 300 metres at the northern end. So clearly, mineralisation that we want to incorporate into a model and understand and incorporate obviously into a study. Thanks, Alex.
I've got a question here from Lachlan Sund, which I do want to address because I've had this query from a number of people. He says, reassuring and rational information presented yesterday and this morning, but can you shed some light on why the decision to delay the study was only made within, relatively recently, given that obviously we'd been flagging this scoping study for release around this time. Can you give people a bit of insight into the process there?
Yeah, so to understand the process of going about modelling and I guess putting together mine or whittle shells, then into mine schedules and then into financial analysis, it's roughly a 2 months process end to end before from the moment we sort of fix the inputs to the moment we get the outputs. So we have done some preliminary runs. And what we have seen is that, whilst that was happening, we were getting some obviously very material results from the test work as well, looking at those enhanced PGE, methods, PGE recovery methods. So, we had a difficult decision to make, and obviously it was just made over effectively the last few days, that we felt that, the significance of the new information was material enough to warrant the continuation of the study. It was really only in hand just in the last few days And so we had that, a very difficult decision to make, but we felt an important one to make sure that, I guess, we're setting the project up for success, and we're analysing the appropriate options and taking those appropriate options forward into the next phase of studies. So it is a complex modelling exercise. That's why it takes sort of that considerable amount of time end to end. But obviously, you don't want to get that wrong as well, right? So we want to be confident in the inputs, and we'll keep working until we establish that right level of confidence that we have the latest and information incorporated before we get to modelling.
Thanks, Alex. Question here from David Roberts. Will the scoping study incorporate any information from the Hartog, Hooley and Dampier prospects to extend mine life? So I think it's pretty early days with that drilling, but perhaps you could give us a comment on the exploration to the north, which has delivered some pretty interesting results recently.
Yeah, look, there has been some very promising results further north, up to 5-10 kilometres away from the resource. So I guess that gives us a clear line of sight to growing this resource, over time. It's not something that we've yet, had a chance to define in terms of resource up there, and it will be some time before we convert any potential mineralisation, into potential resources up there in the forest. But look, clearly the results we put out last week at Hooley have delivered a real sort of step change in terms of the first real evidence of high grade mineralisation, high grade PGEs there at Hooley, and those drill holes are 5 kilometres away from the resource. So look, I guess we want to obviously continue that exploration, really make sure we set the resource drilling up for success, and make sure we prioritise where to do that next phase of drilling. But it will be some time before we can actually incorporate anything into a study, and that's just the nature of, I guess, the process for access to that state forest area, and the nature of just the scale of the area that we're investigating. We are drilling holes that are up to a kilometre apart, and obviously to get high grade in holes that are not particularly aiming at anything but are a kilometre apart. That gives you a sense, about sort of where the potential lies there and where it's going.
Thanks, Alex. It's quite a specific technical question here from Mark Sears. Is there a magnesium component in the nickel slag?
Thanks, Mark. Yeah, look, there is, but we don't believe it's anything of particular concern. We have demonstrated that we can produce nickel concentrate that's desirable to and marketable to nickel smelters. It's just that obviously there is a lot of value there that you lose in selling to a nickel smelter. So that's really the reason and the rationale primarily behind going to the midstream concentrate enrichment step. So yeah, there hasn't been any concerns raised on magnesium that we've had to date, and we have been in discussions with a number of nickel smelters on indicative specification of product thus far. Thanks, Alex.
We've covered most of the issues. We might just wrap up. There's been a few questions there about your strategic partner process, whether you've had any progress with that. You have touched on that already, but given you've got Chris sitting there with you, do you want to just give us a quick update on that process and how we should expect to see it unfold over the course of next year?
Yeah, happy to do so. We'll be looking to, we have been and will continue to be in discussions with strategic partners throughout 2023, and we look forward to the opportunity to releasing the scoping study to talk with them further to assess really the options that we have.
Yeah, I think that it's probably too early at this point to see a formal process or anything like that developing until we get some more detailed parameters around the asset. But certainly, we have a strong level of inbound interest, and we obviously appreciate that that this is a significant project, and it's a unique project. So we won't be rushing into joint venture with anyone that unless we really feel there's a value add and a real strong strategic alignment between us and the party.
Excellent. All right. Well, look, I think we've covered all the issues that have popped up on the Q&A. Perhaps, Alex, should I just hand back to you to wrap up with a couple of closing remarks?
Yeah, look, thanks, Nick. Thanks, everyone, for joining. Obviously, a very good news, story that we released yesterday to wrap up. I guess that we think there's a pathway there to materially improve the recoveries, or the metallurgical recoveries of the key metals at Julimar. So I think obviously pleasing to see the market react strongly today after yesterday's pullback. And I think that's understandable, because really this we see as very much good news, and we're very much looking forward to updating the market with the new resource update in the first quarter next year.
Thanks very much, Alex and Chris. Thanks for your time and for making yourself available this morning. And thank you to everyone. We had over 250 people joining us this morning, and I'm sure many more will tune in to hear the replay of this webinar, which will be available shortly and will be uploaded to YouTube and available on the Chalice website. So thanks, everyone. Hope you have a great day, and this will probably be one of our last webinars of the year. So we wish everyone a very good Christmas. Thanks very much.